In this video, we are looking at examples for Chapter 8 for Principles of One. In this first example, we're looking at information, and what we're trying to do is compute what cost is in our accounting records. So things in the cost, such as the price of the machine, installation, transportation, anything that's required can be included. So we're trying to determine what is the total cost. First, we have price of the machine, and it is $12,500. And I'm just going to format that column to be numbers. There we go. Next, we paid within the discount period, so we have a $250 discount. So we're going to remove that from the cost. So negative $250. Giving us a net purchase price of $12,250. The other things that we can add to that to be recorded in our accounting records are transportation and installation costs. So we have transportation costs of $360. We have installation costs of $895. So we have the machine required mounting and power connections costing $895. Then we had $475 to assemble and $40 used to get it into operation. So assembly is $475, and then we have materials parts needed of $40. Then the last information we have here is that the machine needed $180 worth of repairs. So that repairs are not an included price in the cost of the machine. Those repairs would just be an expense. So the total cost of this machine is the sum of our purchase price and any installation and assembly costs. So next we're going to talk about asset purchases, where we have a bunch of combined information about assets. And we want to figure out what accounts all of that stuff goes in. So here we have that we purchased land for $390,000. Then that land had a building on it. So we paid $33,500 to tear down that old building, $47,000 in fill dirt, and then we also had construction costs for the new building, and we added a parking area with lighting. So we need to prepare a journal entry for all of these costs, which were all paid in cash. So we have a lot of different information here. First, we need to get the total cost of the land. So we have the land price, which was $390,000. We tore down a building, so demolition, $33,500, and then the fill dirt, which was $47,000. So the total cost of land is the sum of all three of those things added together. Okay, so the total cost of the land was $470,500. So now we create this journal entry. So we're going to debit land for $470,500. Then we also have a building. So now we have a new building, and that building was $1,452,000. And then we have the parking lot and the lighting. So what these are called are land improvements. Oh, 87,800 for that. And then we are going to debit or credit cash. Debits have to equal credits, so we're going to add all three of these together. So we credit cash for, are we missing something? Oh, 200 for the new building. There we go. So we credit cash for $2,010,500. Okay. Now let's look at the next example. We paid $395,380 for real estate with land improvements, and a building. So the land is appraised at $157,440. Land improvements are appraised at $58,890, and the building is appraised at $176,670. So what we do is we add all those together. So we have land appraised at $157,040. We have land improvements. And I'm just going to make that a little bigger. There we go. For $58,890. And then we have a building for $176,670. Okay. So our total cost that we paid, or the total cost of the appraisal, is $392,300. Well, we can't record the appraisal. That's an 890. All we can record is the amount that we paid. So what we need to do now is we need to determine what percentage of the appraisal each one of these things is. So we take that divided by the appraisal. One of the things I'm going to do here is I'm going to lock this cell so I can copy the formula. So you lock the cell by putting $2 signs on a PC that is done with F4. Okay. So I'm going to copy those down. I'm going to change them to percents. Okay. And now I need to get that 395,380. So cash paid is 395,380. Okay. So I need to take that amount, and again, I'm not going to lock that cell so I can copy that formula, times the percentage so that I can record my journal entry. So based on the percentages, this is the amount for each one of those items that I can put in my journal entry. So now I can record my journal entry. I'm going to debit land for $158,152 and land improvements for $59,307. Our building for $177,921. And then I'm going to credit cash for the full amount that I paid. Okay, so that's that journal entry. Next, let's look at an example for depreciation. So we have information about a computer that is or a company that is to use in operating activities for the next 4 years. It estimates the equipment salvage value at $25,000. So we want to prepare a table showing depreciation and book value for each of the 4 years, assuming straight line depreciation and double declining depreciation. Okay? So first, we're going to look at straight line depreciation. So we're going to put some information right here. So I'm going to put the equipment at the cost of $154,000. The useful life is 4 years, and the salvage is $25,000. Okay, so that's what I'm just going to put that information there right now. It's a number. Okay, now I can get depreciation information, and we can build this table that we're going to insert. I want to insert a couple of rows here so I have room for that table. Okay, so the first thing we're going to do is we're going to figure out what straight line depreciation is. Okay, so we know that we have the method of, we have equipment cost minus the salvage value divided by its useful life. So we get straight line depreciation of $32,250. Well, Excel also has a formula for that. So we could put equal SLN. So it says you see returns the straight line depreciation of an asset. Okay, so we're going to put a parentheses. So the first thing it wants us to do is the cost. So we're going to click on cost and then put in a comma. Just follow the information here. Now we want the salvage value, and then we're going to put a comma, and then we're going to pick the useful life. Okay, we're going to close that parentheses, and it gives us the straight line depreciation amount. Okay, now we'll build our table. So what we have is the year, the annual depreciation, and then our year and book value. Okay, so I'm going to make those columns a little bit wider so we can see the information. And then I'm going to, right here, wrap text. There we go. So we have years 1, 2, 3, and 4. Our annual depreciation, we calculated 32,250. I'm going to lock that cell so I can copy it all the way through. Okay. Then our year-end book value. Book value is historical cost minus the accumulated depreciation. So here we're going to take 154,000 minus 32,250. We have year-end book value. Next, we're going to take that 121,000 minus the year 2 depreciation. So the end of year book value for year 2. Then year 3, we're going to take year 2's amount minus year 3's depreciation. And for year 4, the year 3 amount minus year 4 depreciation. We end up with a year-end book value of $25,000, which is our salvage value. Okay, let's finish this one. I know this video is getting a little bit longer than I like to intend, but let's finish this with double declining depreciation. Okay, so with double declining depreciation, you take the 100% and divide it by the useful life. So we would take 100 divided by the useful life of 4, and we get 25. Then you take that times 2, and you get that our depreciation amount is 50%. Okay, so 25 times 2 equals a double declining depreciation of 50%. So when we have this information here, now we have year and we have beginning book value, and then we have the depreciation rate, annual depreciation, and the year and book value. Okay. Did I not put an E on that? Okay. I'm going to make these columns just a little bit bigger, and then I'm going to wrap those so we can read those. Okay, so we have year 1, 2, 3, and 4. Our depreciation rate is 50% for all years. Okay. Our beginning book value is 154,000. Okay. And then we have our annual depreciation. So we have different ways we could do this. So one is we can take our book value times 50%. We can also use double declining depreciation. So returns the depreciation of an asset for a specified period using the double declining balance method. Okay? So we have cost, salvage, life, and period. So our cost, we have the salvage value. Our useful life is 4 years. And then this is period 1. Okay, so we do our annual depreciation is 77,000. So now I'm going to go in here. Here we go. We're going to lock this information here. So we're going to lock the 154,000. We're going to lock that cell. And I'm going to lock the cell that has the salvage value. Okay, and I'm going to lock the cell that has the useful life. I am not going to lock the cell that has the period, because when I drag that down, I want that period to change to 2, 3, and 4. Okay, so I am going to pull that down. Okay, so now we have the depreciation amount. So I'm going to take 154,000 minus 77,000 to get the end book value. Then I am going to say that the end of year book value from year 1 is the beginning book value for year 2. Okay, I should be able to carry this down now and carry this down. Okay, and now we have a 4-year depreciation table. We're going to continue the rest of this in another video.